Yeah. Okay. So I will begin today with some of the very basic things as far as what are stocks, what are shares, and what is the stock market. I'll begin with a very simple example. Let's say that I wanted to begin a tea shop, and the cost would be, I don't know what the cost would be. Maybe let's suppose it is going to be like 20,000 rupees, very basic cost. And but I don't have 20,000. So I ask a few people to join me. Maybe I might ask Indy, I might ask Godwin, and I'm just looking at some names here, and then Smita. So all four of us will put in maybe 5,000 each, and we will contribute to purchasing the products and all that are needed to open up a small tea stall. Okay. So we all four have invested 5,000 rupees each. The total cost was 20,000. Will we get the money back? We have no idea. Okay, we could, if the business goes down, we could lose all of the money. There's no guarantee at all. But if the business is profitable, we'll continue to make more money. And the hope is that we will go beyond 5,000 and make much more than that. Okay, so how does it work? Well, we start the business and we start selling tea. We gain some customers, and then if we do a good job, more customers begin to come and sales increase. Okay, and as that happens, what happens is at the end of the month, we calculate all the profits, take out all the costs involved, all the costs, what business people would often call overhead. They would take out all the cost, and whatever is left, the balance that is left, we would split that money between the four people. That's called dividends. That's usually companies do that. They pay dividends. Now, each one of us, we put in 5,000 each to begin this small business. Now, not only the expense, part of the expense will be for us to put aside some money as a backup fund. In case there is an emergency, then we don't have to take money out of our pockets, some kind of a backup fund. So we continue doing this. And then after a while, we say, we have enough in our backup fund, maybe to start another tea stall, another part of the city or the community. And we begin to expand. And each month, the income increases. Remember, we split the profits in four because four of us invested into this tea shop, into this business. Okay. And then we get the profits. Now, at this point, let's say we have started 3 or 4 of these tea stalls. And at this point, someone else comes. Like, for example, Jinsi comes and Jinsi says, hey, can I take part in this? And then maybe Samuel comes and he also says, can I also take part in this? Then what did each one of us spend? We spent each of the four spend 5,000 each. Okay, now what will Samuel have to give to enter into this business? Or what will Jinsi have to give to enter into this business? Will it be 5,000? Obviously, it won't be 5,000 because by this time, we have established the business, we have a clientele, we have a name in the community of selling good product, good services, and things like that. And so there is now a momentum in the business. And so therefore, see, when we invested 5,000, it was only an idea. There was nothing there, just an idea. So now, what will be the cost? Well, the cost is going to go up higher. Will it be 6,000? Will it be 7,000? Or will it be 10,000? Okay. Now, if we have started several different locations, most probably it may be, like I said, maybe 7, 8, or even 10,000 rupees to get into this business. Okay. So each one of us, it's like owning a share. Instead of 4, it may be 5 or 6 people, 7 people. The numbers can increase. And then the profits begin to get spread. Okay, and we split the profits at the end of each month or at the end of the quarter. That would be every 3 months or 6 months, whatever the company decides. So this is basically how even these big corporations operate. Although it is much more complex, this is a very, very simple concept for those who don't even know what shares are. So this is the idea of shares. Now, what is a share market or the stock market? The word share and stock, about the same meaning. And what is the stock market? Well, that's just a place where these shares are sold. Okay. Now, initially, when we are just a small business, we would be selling the shares ourselves. Those who are the ones who began the business, we would sell it ourselves. It would be a personal thing. But once the shares become public, then it's publicly traded on the stock market. Okay. And then the prices go up according to what? Well, the prices can go up according to various factors. Okay. It can go up according to the public's feelings about this company. Like everybody's very positive about the company, and then all of a sudden that's, and the shares value of the shares can go up. But also not just the feeling of the people. That's also part of it. Emotions are part of it. But also, if the company is doing well in the long run, you're going to find that the value of the shares do continue to go up. Okay, so that's just the pattern. So there is definitely this whole thing of euphoria, this whole thing of, people that are being positive about the company. That does bring the value of the shares up. And also there is this concept that, very basically, if the business is doing good, earning profits are increasing, then the value goes up. Okay. Now, then the question for us is, how do we know which companies? Okay. There are two ways. One is something that is often used for long-term investing, and that is more of the traditional method of taking, that's called fundamental analysis. In other words, they're doing a complete analysis of the company. By the way, a complete analysis of the company, the value of the company itself, the number of shares it has outstanding, and also how much debt it has. A lot of details are looked into that for long-term investment. But for us, it's trading, and we're looking for short-term profits to earn an income. Okay. By the way, hi, Melody and Dan. Thank you for joining us. These guys are up 6 a.m., I think, in the morning. Thank you so much. It must be 6 a.m. where you are. And so, yeah, thank you for joining. The rest, I think, are right here in India. So anyway, that's one way. The second way is called technical analysis, and that's what we are doing. What we are doing is we're taking some technical measurements of the price movements, okay? And so the ones that I've been sharing is what is called the 20-day moving average and the 200-day moving average, okay? The 20 and the 200. When the 20-day average is higher than the 200-day average, or the 20-week average and the 20-month average, okay, is higher than the 200-month average, then we consider that as a stock that is trending. In other words, when you look at a 20-month, that's 200-month, that's up to 15 years of data, okay? So that means for 15 years, okay, the value of the stock has been going up incrementally compared to its 20 average. That means that company is doing well, okay? Just a technical look, but that means the company is doing very well. And so we look at those three. And now in the link that I've shared here, let me share that one more time for those who have joined brand new just right now. Okay, in the chat box, I've put a link. So if you could save that link, what I will do is I will keep adding links that I feel that are useful to learn trading. So just go ahead and save that somewhere else on your computer. Okay, so this is the basic idea of what shares are, what stocks are, and the stock market is simply a place where you buy and sell shares, and all of that is done through a broker that you are using, a brokerage account. Okay, so they handle all of that. Now, I have shared in both of our groups, in the Indian group and the US group, I've shared a link with a list of good stocks, okay? And where I have actually done that process, but I teach how to do that also, and that's also in that link, or I will be adding to that link how to do that process of selecting the right stock. Now, the rest of our time together, what I want to do is I want to be able to spend some more time on when to enter and when to exit. That's the key. When to enter, when to exit. But all this time, I've been talking about, how do we select the stocks and what is that process? Okay, up to this time or up to this point, if anybody has questions, you're willing to, you're free to go ahead and ask those questions. And as I mentioned, if somebody has questions in Malayalam, I will give a brief explanation in Malayalam also. Malayalamത്തിൽ ചോദ്യം ഉണ്ടെങ്കിൽ അതിലും ചോദിച്ചാൽ അതിലും ഞാൻ മലയാളത്തിൽ ഉത്തരം പറയാം. Otherwise, we'll give the answers in English. After that, I will move on to the process of selection. Not selection, but entry and I'll just give you a minute for your questions.
Sir, ഞാൻ സാറിന് പേഴ്സണലി മെസ്സേജ് ചെയ്തായിരുന്നു. അതിന്റെ ആ ക്വസ്റ്റ്യൻസിന്റെ ആൻസർ പറഞ്ഞാൽ മതിയായിരുന്നു.
ഞാൻ പറയാം. ഓക്കെ, അതൊന്ന് ഓർപ്പിച്ചാൽ മതി. Okay, good. Yeah, Samuel had asked a question, and I will get to that. Please remind me if I forget. And that's a good point. There was a question about resistance, support and resistance. I will get to that also. And if I forget, please remind me. And so the things that I explained in Malayalam, I will also explain in English. But yeah, please do remind me after I get into this, I will explain. I hope I can finish all of this in 1 hour. All right. I think we can. Any other questions up to this point?
Yeah, just a
Yes.
really quick question. I'm, from my little background, there seems to be, you've got this, I've heard this concept of stocks being something that yield returns over a long period of time. And then there's, because of the podcast I was doing, there was a guy who actually talked about swing trading, which seemed to be a different type of a movement and concept. While the stocks might be the same, but the behavior and interaction with it seems to be different. Is that something you could, what's the difference in these two? Because I've heard other people talk about they'd invested in stocks and got their huge returns 40 years later.
Okay, there are three types of three types. One, there are long-term investors that hold for like 5, 10, 20 years or even longer, or for an entire lifetime. Those are investors, and many of them, they would invest into stocks that pay dividends, and by the time they retire, they can end up literally living off of those dividends if you do it right. Okay. Then the second type are people who are swing traders, and swing traders, they are actually you will see on a daily basis the stock prices going up and down. So basically, they're just catching the swing, right? When you can actually almost calculate the movements. And so as it gets to the next bottom, they would enter and then try to calculate the top. That might be 2%, 5%, or 10 or 20% like that. They would try to, that's basically all swing trading. And so they're catching the swing. Now, you could do that on a daily chart, weekly chart, or a monthly chart. If you do it on a daily chart, you're talking about a swing that would take maybe 1 or 2 weeks. If you do it on a weekly chart, you might be looking at maybe the swing up. You might be looking at maybe 1 or 2 months. If you're using a monthly chart, it might take maybe 8 to 10 months or a year or 2. So that's people that hold it longer. So swing trading is really anything where you're holding for a few days to a few months. That's swing trading. Then there's the third type that are day traders, and day traders enter, and they're taking a very small amount during the day. They enter, they purchase at the beginning of the day or sometime in the day, but at the end of the day, they have to sell. Now, you might be wondering, why do they have to sell? The reason is they have to sell because day traders or intraday traders, when they do it, they also are borrowing from the stockbroker. Okay, so if you have a certain amount of money, you can trade for 5 times that amount or 10 times that amount. All right, so you're basically borrowing from them. Now, the cost of trading is so much more, and because you're borrowing from them. So then the only thing is the two limitations. One, because you're borrowing from the broker, it will cost you more. So really, to make money, you have to make a lot more money. The other side of it is that by the end of the day, you have to sell. If the price goes down, there's no other option. You have to sell. Okay, so you could end up taking losses like that. So that's where day traders are very focused on stop losses, because they don't want to make more than a small percentage of a loss. All right, so there are these three types. And so the type of trading that I'm teaching, that we're doing, would come under the category of swing trading. Yeah. Okay, so let me go into our entry and exits. Okay, if there are no further questions. All right, let me share my screen. And once I've shared the screen, if you're not able to see the screen, please do let me know. If you see it, then that's fine. Okay.
I have one question.
Yes, please.
So whenever, doesn't need to be now, of course, but just how to set the stop loss on
Yeah.
Webull.
Okay. Right. I could share that at the end, no problem.
Okay, thanks.
Yep. As I said, swing trading, when you're holding it for several, yeah, let me go back to the yeah, when you're holding it for a longer period of time. 1 minute. Yeah. In swing trading, when you're holding it for a few days to a few weeks, you can still set stop losses. Now, I've been trying something different. I've been trying it where I'm not setting the stop losses. Okay. And I've been doing that for the last 7 or 8 months. I'm not saying that this is the best way, but the only thing is, I'm being extra careful to select only companies that have been trending on the monthly chart, weekly chart, and the daily chart, so that these are stocks that are really trending well. And I don't trade anything else other than that. Now, there will be people that disagree with me on that, but I will show you how to set that on Webull. Yeah. Okay, let's look at the entry and exit. So I'm looking at a few samples right here. These are from the Indian market, but it doesn't matter. They're all the same. You can take stocks from any, and they all behave the same. So I have 2 moving averages, the 20 and the 200. These are 2 that I'm using. And I'm also using a 5-minute chart. You can see right here on the top, 5 minute, 10 minute, 15 minute. I'm using a 5-minute chart. You can use the 10 or the 15. That would work just fine. I'm using a software called tradingview.com, and you can get a free account on that. And the free is really all you need, except that now they have brought some limitations. So now people are beginning to switch to doing all of this on either Webull or, like in India, on Zerodha. Okay, because they give all of this for free now. They give that for free. TradingView used to give it for free up to 3 indicators. But now they have begun to charge. And so that's what's going on. All right. So we're looking at the 20 and the 200 period moving average. Okay, these are 2. Now, I want you to observe what happens here. 2 concepts. Number 1, the 20 and the price are like friends. They stay close. They come apart, but they come back together. They get back together again. They come apart, see, going down, come back together. Come apart, going up, going down, they come apart, but then they come back together again. So wherever you see the 20 period moving average and the price separating like this, see, it went up. The price went higher than the 20-day moving average or the 20-period moving average, and then it comes back. Even when it goes down, it comes back. So that's one observation you will need to keep in mind. Here it is. See this? The 20, the price went below the 20 and stayed apart up till this point, and then it came back together. So that's one concept you need to remember. Second concept you need to remember is that the 200 period moving average and the 20 period moving average. By the way, I have videos on how to do all of this, the setting the stop losses, setting on the Trading Today channel, you will see that I've done videos on how to do that. You can take a look at it at a later time, and the links are in that file. Okay, so you will notice that the 200 and the 20, they're also friends. See that? The 20 and the 200, they're together. The 20 go below the 200, but then it comes back together again. The 20 is higher than the 200 right here, but then they come back together again. As you give it some time, they come back together again. There it is. All right. So this seems to be a constant thing that you can observe, the 20 and the 200 coming back together and separating again. So when to enter? There are two ways of figuring out how to enter. All right, there's two. One, you can enter right here as the 20 is taking off from the 200. See that? That's a point that you can enter. And here's a tool right here on the side with which you can calculate. Let me see, here it is. Calculate how much you would make. Let's suppose that you entered at this point, okay, and you got out right here. That would be about 5%, 5.5% right there, okay, of a profit. Now, the question is, how do you know this is the right time to enter? Okay, well, as the 20 goes above the 200, that is a good time to enter. Now, is it always a good time to enter? Well, not always, because sometimes you will see that the 20 goes above, but it doesn't go much further above. It just comes back down. Okay, so it's like dead, very flat for a long time. It's not really gaining much. Okay, so when do you know what's a good time to enter? Well, this is where the RSI also comes in. This is another indicator that we're using, RSI, and you use just the 14-day calculation for the RSI. Here it is. So the RSI is considered oversold and overbought. These are the two concepts for RSI. When the RSI comes down to 30 or below, that means it is oversold. That means that the chances of this price of this stock going down further right now is very slim. Okay, but the chances are higher that it will go up. Now, once the RSI gets to about 60, 70 and higher, the chances of it going higher than that are very low. Okay, it can continue to go higher, all right, but it's very low. I want you to observe exactly what's going on as the RSI is down here. Observe what's going on here as well. See, look at that. Okay, so let's say that the RSI is low right here. Okay, but the 20 is just close to this 200. Now, we're looking at entering when the 20 goes above, right over there. Okay, that's where we want to enter. But then look where the RSI is. Okay, so, but if you were to enter right here, but the RSI was down and the 20 and the 200 were close. See, the RSI is down below and the 20 or 200 are close. That's a good time to enter. The 20 and the 200 are very close to each other and the RSI is low. Now, will it always work? Is it always the best? Well, no, not always. Like, look right here. If you entered here, what would happen? You would have waited, again, going sideways. But then for how long? Not very long, within maybe a day or two. So in case that happens, within a few days, you would still be back up again. Now, what I do is I've been taking this trade for just 1%. Let's say I entered here and I would set a target of just 1%. Here it is, like right over there. I set a target for 1%. Now, many of you might look at this and say, wait a minute, it has gone much higher than that. Why do you only take 1%? The reason is I found over time that the up and down swings are quite frequent just with that 1% movement. And so I take the 1% and I get out. Now, some of you in this group, you've tried the 2% and it works for you sometimes. Okay. And very often you end up waiting longer. You can try the 2% or the 3%, but then for me, this 1% has been working out really well. And I'm continuing to do that. So this is one area you can find where the 20 and the 200 are very close to each other, and the RSI is very low. Sometimes the RSI will even get lower than that, where, like, here's an example of that right here. See this? And the colors kind of show kind of a red shade there, getting very low. So that's one type of entry, as the RSI is low and the 220 are very close to each other. It's another point of entry. Now, the best point of entry that I like is when the 20 is below the 200, like this. Okay? When the 20 period moving average and the stock price is below the 200 period moving average, and the RSI is low, like this. Okay? I like to enter right over here. So if you enter here, then one of the things you will know for sure is that the 20 and the 200 are coming back close together again. Okay? Now, one other thing that I like to look for is when I enter here, I'm also looking for a flat 200. Right now, it was a kind of a declining 200. Flat 200 is best. But let's see what happens if I were to enter there and set a 1% target, like right here at this low point, and then set a 1% target right there. That would be 1%. See that? And I would have made that 1% target right over there. You can see that right there. That's 1% right there. Before the 20 even gets to the 200, I would have made that 1%. Okay. Now, will it have gone up higher than that? Well, it's possible. See, up to 2%. Yes, you would have, right? But very rarely. Okay, not as common, but 1% is quite common. So that's another area that I like to look for. Now let's look at another stock that, for another example. This is another company that, you can see as the 20 has gone above the 200. Look at this. I want you to observe the price movement. I'll measure the amount of movement or the percentage of movement here as well as the 20 went above right here. See, the 20 has gone above. And let's say that you got in after the 20 went above and you decided to stay as long as the 20 was higher. Like this is if you had time to actually sit there and watch it. That would be 3%. Look at that. Okay. Now, what I'm doing is I would want to enter at that point, and I would put a 1% target, which would be right around there. And I would get out right there. Okay. Now, you could try to stay longer, but I may not have the time to sit and actually watch and observe if that, because I'm working all day and I only get a few minutes during the day to just kind of look and observe. All right. And now let's look at the movement of the 20 period below the 200. And then we'll see what happens here as well. Along with the RSI, we'll look at both. Here's another place where the 20 is below the 200. Look at this. The 20 has gone below the 200 and the 200 is almost flat. I like those when the 200 are flat. 200 is flat like this. Very good. But now when there is a downward trajectory, that's also a risk that sometimes the 200 and the 20 may come close to each other, but the 200 may be coming down. But still, let's say I entered right here. Look at the RSI is way down here. So let's say I looked at this and I say, well, the 20 is below the 200, and I see that the RSI is very low. Will I enter here? Well, first, I want to see, can I get 1% out of this? Here's where the RSI is also low. Can I get 1% out of this? That's what I want to check. Yes, I can. There it is. There is a possibility of 1% before the 200 gets too close to the, here it is, 1% right there. See that? Right there. I would have made 1% right there as well. Okay, so we're looking at two different options. One, where the RSI is very low and the 200 and the 20 are close to each other, like right there. RSI is very low. Now here, the RSI is a bit higher. So I may not enter here, but here, the RSI is below 30. and the 200 and the 20 are close to each other, and that would be a nice point of entry. But that's if I had the time to actually sit there and watch this. See that? Now, if I entered there and I stayed with it, that would be about 4%, 4.8%. Okay. And that would be like several days. Look at that. Thursday, look, if you look on the bottom, you'll see the dates. Thursday, November 30th to Monday, the 4th. See, that'll be several days. But still, you'll end up with about 4% profit. That's if you're able to sit and watch and observe that. But what I'm doing is just setting a 1% target, getting in and getting out, and then I'll enter another stock that does the same thing. All right, putting in 1. And also, here it is. Here's another one where this 20 has gone below the 200. Is this something that I can enter? Okay, because I don't know what's coming up. Can I enter here? Well, the RSI is okay because it's not too high. But if I enter here, do I have a chance for 1%? Like, right, if I enter here, look at that. No, I don't. By that time, it would hit the 200. Now, it can still go above the 200, but the 200 is a very strong resistance. Okay, the 20 is a resistance, but the 200 is a very strong resistance, and it may just bounce and keep coming back down. But then it may go up further higher as well. Okay. All right. And you'll notice that you see this monthly, weekly, daily. These are all the stocks on my list that I have checked on the monthly chart, weekly chart, and daily chart. And all of them, the 20-period moving average is higher than the 200-period moving average on the monthly, on the daily, and the weekly. Okay. All right. Let me go back to the video, and then we can. How do I stop the share? Oh, here it is. Okay, I found it. All right, I'm back. Okay, I hope that was helpful to you. When to enter? I'm looking for a couple of options where the 20 and the 200 are close to each other, and the RSI is very low. Okay, and the chances of the price going higher, the chances are much higher. The probability is much higher. One of my favorites is when the 200 is flat and the 20 goes below and the RSI is very low. That's one of my favorites. I enter there, and then you can expect the 20 to go back up higher. Sometimes the same day it will go. Sometimes it may take one extra day or 2 or 3 days. All right. Let me just give you a chance to respond. Any doubts, any questions, if you'd like for me to explain something again or clarify something. Yes, tell me.
I have a question. So you're no longer using 60.
I stopped using 60-period moving average when TradingView did not allow for 3 or 4 indicators on the free account. The 20 and the 200 are perfectly fine. They are very good. Yeah. Any questions on the entry and on the exit? You can ask in Malayalam if you need to. മലയാളത്തിൽ ചോദിക്കുന്നെങ്കിൽ ചോദിക്കാൻ ഞാൻ മലയാളത്തിൽ ഉത്തരം പറയാം, പിന്നെ അത് ഇംഗ്ലീഷിൽ ഞാൻ അത് explanation കൊടുക്കാം. And let me see if I can log into the Webull while I'm at it. I haven't used Webull on my laptop in a long time. It's been on my phone all this time. All right. Okay, any other questions? So since last April, I've been following this method just solely, only this method. And on an average, me and several people in this group, they've been getting around, for the whole month, for the entire month, on a monthly average, for their entire funds that they have invested in, they've been making 3%, 4%. Some have done up to 5 and 6% profits. And I've posted that in the group. You've seen that. And so that's a calculation of the percentage that they've made based on the total amount of funds that they have invested. So they've done, in some they may have only made a little bit of profit, others they've made a lot, but the total calculation is that they have done a larger amount. Okay, so that's what they've been gaining. All right, so this is quite clear then, when to enter and when to exit. Okay, then I will go to the question that Samuel asked, and I will switch, I will give the explanation both in English and Malayalam, but this is quite significant for us. It's about support and resistance. I don't want to get too much into that right now, but these are factors that we need to keep in mind. Let me get to that. Let me share the screen. And okay, wait a minute. I think Webull is there. Let me get out of that. Go back to yeah. All right, I think you can see my charts now. Is it visible? Yeah, I think so. All right. Support and resistance. I'm going to show you. Okay, the question in the group was this. Moses, I think, was the one who talked about daily support levels and how that impacts the 5 and 10-minute charts. So this is a 5-minute chart right here. You can see the 5M. This chart right here is the same company, but it is the daily chart. You see the D right there. So it's a 1 day, which means that each of the candles represent 1 day of prices. Okay. Now you will see, I'm going to show you some of the resistance levels and how they are repeated. Okay. I'm going to draw some lines to show you that as well. All right. You see right over here, you see that the price would not go further higher at that point. See that? And it hit a resistance and it went down. And then what you will find is historically that would be repeated, and in the, okay, I'm going to have to look at it more broader. I'm going to show you several of these. Here's another one where you see the resistance numerous times right there. Okay, it's an area of resistance, not a particular price. The price would not go higher than that. Okay, and then there's an area of support right here. Look at this. All of these, it would not go further down. That's an area of support. Now, here's this right here. This whole area right here is a resistance. It would not go higher. And then this is an area of support right here. Right? This one here, there, and there. This is an area of support. Okay. So in that, in the group, the question that was asked was this. One person said, look, there's a support, there's a resistance on the daily chart. And here it is. You see this? There's a daily chart, and you'll see a resistance right here. See the price tried to go up higher. 1, 2, 3, 4 days in a row. The price tried to go higher, it wouldn't go higher at all. And it wouldn't even go lower than this. So the price is like stuck between these two areas. Now, look at this price, 1163.8. Now I'm going to go to so this is on the daily chart. Now I'm going to go to the 5-minute chart and the 10-minute chart, and we're going to look at what happens here. See, on the 10-minute chart as well, on the 5-minute chart as well, that area proved to be an area of resistance, again. Okay, so that's a very strong area of resistance because it is a resistance on the daily chart. See that? It's a strong area of resistance here as well. But I also want you to see that the 200 is a strong resistance as well and a support. Look at this. This is support. This is support. Okay. And the 200 can also do the same. So as you are trading, you want to watch for the 200, which can act as a support, or it can act as a resistance and the price comes back down. Okay. So the idea with support and resistance, so both you can have in the daily chart, when there is a resistance, that acts as a very strong resistance on the 5-minute and the 10-minute chart as well. So the basic idea with support and resistance is like this. It's like climbing a staircase. The ceiling that we have right now is a resistance. And if you take a ladder and you try to go, the ceiling will block you. You cannot go higher. But if you take the staircase and you go upstairs, that same floor that was a resistance now all of a sudden becomes a support for you and you can stand there. In the same way, when you draw a line and you see the price being rejected numerous times, okay? So it's like even the 200 also becomes like that. It's resisted, it's rejected numerous times. Then finally, when that resistance is broken, then that resistance all of a sudden becomes support. That area of resistance becomes support. Okay? Samuel ചോദിച്ച ചോദ്യം, let me just explain that in Malayalam also. ചോദിച്ച ചോദ്യം, ഞാൻ മലയാളത്തിൽ പറഞ്ഞ കാര്യം വിട്ടുപോയായിരുന്നു, സോറി. ഈ 200 period മനസ്സിലായോ? Okay, good, very good. You understood. Okay, thank you. All right, so I don't have to repeat that in Malayalam. Sometimes I struggle to explain things in Malayalam also, but okay, I'm glad you understood. Okay, any others? Any question on when to enter? What is the best time to enter? And as I said, if you have time to actually sit with the trade, like if you have time during the day, then you can actually sit there and allow it to go higher. It can be done. You can have, you can end up getting 2, 3, 5% like that. But you have to have that time. Yeah.
So do you have a maximum time? Do you have a maximum time that you're in your mind where like?
Yeah. See, usually the 1%, it may hit the same day, or it may be 2 or 3 days or a week. Okay. I would like to get out
with more than a week.
It has happened to me where I've been in it for a month or two. So what I do is I take my capital and I split it up to maybe 7 or 8. So I may enter 7 or 8 different stocks. And those who are starting, I recommend that you only enter maybe 3 or 4. But then once you're used to it and your capital is increasing, you can go up to maybe 7 or 8 or 10 different companies, all where you're entering at a place where you are so certain that, yes, this may go up. Like, for example, the 200 is flat, the 20 has gone down, and the RSI is very low. You find things like that, several times in a day, and then you enter there. And quite often, you'll find either the same day or that same week itself, it will hit. But then sometimes there are some issues, maybe some news that's negative or something, and the price may go down. Sometimes the price may go down 5 or 10% lower than your entry point. That's happened to me, and I may end up waiting for a month or 2. That has happened. But during that time, I make profits on other trades. Yes, Melody.
Maybe that's the answer. I was just going to ask, why don't you just put it in 3 if you're only waiting for a 1% increase?
Yeah.
Why do you divide it into 7?
Right. I enter 7 to 10 because there are these chances of getting stuck on some for maybe a month or 2. But in the last 7-8 months of just doing this method, I've only had that happen to me one time in 1 month. That was last month. I got stuck, but then it came back right up again this month, and I'm back at it. I'm making profits again. So now one of the things that I've been doing is I've been setting aside about 10% of my fund as cash. It's like a money market fund that can be done through the stock market. So it's there and I can get it sold within just a few minutes and I can use those funds. And in India, it's called liquid bees. In the US, you get it through Webull. There are several money market ETFs, it's called money market ETFs. I forget the name right now, but several companies have that. And it's almost like having your money in a savings account. Approximately that much profit you'll make. So what I do is I've been putting about 10% into one of those, and I just leave it there. And I'm only trading with 90% of my cash, because in case that happens again, where everything gets frozen and, just not frozen means, nothing in a negative sense, but, from my entry, the stock went down maybe 5 or 10%, and I may end up waiting for a month or two. If that happens, then that 10% fund is there that I can trade and still make money, because I'm thinking of this as a income generation.
How much time are you spending?
Yes.
I was just gonna say, how much time are you spending now each day?
Each day.
What's a good allotment of time?
For me, for my personal use, I'm only spending I would say about 30 minutes a day or less for my personal use. But I do spend much more time because I'm working with these two groups, especially the group in India. I wish I'm not awake during when the stock market's open in the US, so I'm not really awake. But I do put in a few ideas. But one of the things that I want to do is I want to maybe, pre-market, I can put in some more ideas. So that will kind of get people's minds rolling. But I end up spending much more time during the daytime because I'm helping others as well. Yeah. Other than that, for me, I only spend maybe half hour or less. Yeah. Okay. Any others with questions?
I have a question. So hearing you when you're talking about dividing your
Yes.
fund, so are you dividing that based on on the patterns of specific stocks you've been observing over a long period of time? You're basically diversifying even that. Are you doing that type of a portfolio diversification?
No.
Is that like a planned thing you're doing?
No, not for trading as swing trading, not for swing trading. When you're doing it as a long-term investing, where you're buying and holding stocks for 10 or 20, 50 years like that, yes, you want to diversify into different types. You might get some technology stocks, some in the oil and natural gas business, or some like that. You can diversify. That's for long-term stock holding. This is just trading for an income. Now, the 7 or 8, what I'm doing is I'm just arbitrarily splitting it up into 7 or 8. I'm looking for 7 or 8 good possibilities, high probability trades where my 200 is flat and the 20 is down below and the RSI is very low. So I want to find about 7 or 8. Now, like today, I needed to find 3 because yesterday was a good day. 3 of my stocks sold off. So today, although I was traveling, I told my wife, we had to attend this wedding, and coming back, I parked on the side and I looked and looked and looked, and I found 3 good ones. And I entered because the market was about to close. The market closes at 3:30 here in India. And so that was about 3:10. I stopped the car, and usually, what I find is most of the time, not always, most of the time, toward the end of the day is a good time to get in. Because I find many more that where the 200 is flat and the 20 is low and the RSI is very low. I find more toward the end of the day. I find it all during the day, sometime morning, afternoon, all the times, but it's more common at the end of the day. Okay.
End of the day, like 5, 6.
End of the day meaning like half hour or 1 hour before the stock market closes. Yeah. For the US, it's Eastern time. What is it? 4 p.m. or something like that? 4:30? I'm not sure. Yeah. Eastern time, 4:30. And for you guys, it would be what is it? 1 o'clock in the afternoon, something like that.
Yeah. Okay.
Yep. Yeah. India also needs at least three time zones, but we don't have that. We only have one time zone. So the people that live way further in the east, their morning starts very early, like 4 or 5 o'clock in the morning. The sun rises, and for some places, I think by 7 in a.m. or 8 a.m. the sun is straight up. It's like noontime. Yeah, I think the further east you go and the further west you go, we face that problem here, but they're not willing to make 3 time zones. Yeah. Okay, any other questions? We have just 1 minute left, and we can take more time if needed, but that's all. So please save this link. I think I've put this link here already in the chat box. So please save that link, and I will add more links to that. There's a link in that file. There's a link to kind of like a basic video about the stock market. I will update that a little bit. And what is it? It's called Trading for Beginners, it is called. Yeah, there's one called Trading for Beginners. It's just very basic. What are stocks? All of that explanation, step by step, and I'll do an update on that. And then also I'll put in how to select the stocks. All right, looking at the monthly, the weekly, and the daily, and so that gives you your watch list. Now, in the group, I do share my watch list, but then, of course, I want you to be able to do that yourself. I don't want anybody to be dependent on me. If once you get some of this knowledge, you should be able to take off and do things on your own. But I think the group is really good because it can be a great source of encouragement and learning and sharing ideas. So yeah, so that's where we stand. All right. If no other questions, we can close right now. Okay. Then thank you. Thank you.
The stop loss.
Yes.
The stop loss.
On Webull. Yes. I will share that. What I'll do is, since Webull won't be applicable to the rest of the people, if others are leaving the meeting, that's fine, because it would not be applicable for all of you. So have a good evening for those in India. God bless you all. It is, 8:30 p.m. right now. Okay, so God bless you. Have a good day, Indy. Thank you for joining. Godwin, Smita,
Thanks,
Tasi,
Alexei.
and Samuel. Thank you. God bless you.
Thanks. Have a good one, everyone.
Okay, so Melody, I will log into my my Webull, and then I will show you how we take care of it here. Just give me 1 minute. My Webull is often, I use it more on my phone now than ever before. I will get it just a minute. Here we are. I have to find my password.
So the one that we're actually trading on is the other one, right? Trading.
So trading view is what we view
Oh,
to help
Got it.
determine
Got it.
what we jump in on, but Webull is what we actually trade on.
And Webull also provides the charts, by the way. If you want, you can use the charts on the Webull, but trading view is just so much easier to handle. All right,
Yeah.
here it is.
so do you still go back and forth with both of them?
I still do.
Okay.
But I have a paid trading view account, and so that works out for me. All right, here we are. opening up then I'll share my screen. They've changed a lot of things. Okay, I'll go ahead and share my screen right now. A lot of changes have been made. Let's see, where do I share? Share screen. Yeah, here we are. Let's see, trading stocks. Since I have not been using the desktop app very much, or the desktop. Let's see, we get. All right. My account.
So since we saw you last year,
Yes.
have your profits increased?
Yes, it
Have
has.
you?
And actually, since we met up last time, this was last April that I began doing this pattern, this 1% strategy, and that has made a huge difference.
Wow.
I'm using the same concept. The only difference is this 1%. Just taking the 1%, I'm getting out. Because otherwise, often I get in and I'm looking for a 10% profit or something, and then it just goes up and down, and I might make a profit, I might not.
Ah.
Let me see, how do I get into this? Oh, this must be it, web trading. Yeah, they've changed all the stuff here, and yeah, I think this is it. No? Yes, this is it. Okay. Right here on the left, it will say trade. I go there. And let's say, for example, I'm looking at Tesla right here. See this? And you set the buy. And let me get this out of the way. Okay, here it is. Let's say that I'm going to buy 10 shares of Tesla. Here's the price. The order type can be a market order. That means whatever the market price is right now, that's where I enter. But then I can have a stop loss order and a take profit order. Okay, so I'm entering at this current price, which would be, here it is right there, 238 is the ask and the bid. You see that 238, approximately 237, 238 will be the price. And I can have a stop. See, I can set my stop loss wherever I want right here. And then the target that I want to set.
Okay.
Okay. Now.
So it will automatically stop it?
Exactly. If the price goes to this low level right here, it will sell. And you take a small loss and you get out. When it gets to this higher price, whatever you said, it will take the profit and you get out. What I've been doing is I would turn off this stop loss part, and I'm only using the take profit part, but you can have both. Now, here's the question. How do you know where to set the stop loss and to where to take the profit? Can I just share that with you also, because this will be helpful?
Yeah.
Yes.
Let me expand this. I should be able to expand this thing a little bit, this chart. Pull it down. Yes, I can.
Why don't you have it on the stop loss any longer?
Because a lot of times, just with the up and down, it can get stopped out and I'm still making more profit.
Got it.
All right, here it is. Look at this. I want you to see, this is a 2-minute chart, and let's use maybe a 5 or 10-minute chart right here. Okay, this is a 10-minute chart. That means each candle represents 10 minutes of trading. Okay, now remember we talked about support and resistance. See at this top level here where this line is, there seems to be a resistance right here. There's a resistance right here, right here. 3 points resistance. But then here, there seems to be a support. See this stock got support right here. Here, there's a support. It won't go down. Again, it wouldn't go down. Again, it would not go down. Here also, at this current price, this company or this stock is fighting with this, this support level right here. See? And it's not allowing it to go further lower. Will it go further? We don't know, but it's not going lower. Look at that. You can see it in action right there, how that support is being active right there. See that? So if you were to take this and enter, now if I were to set a stop loss, I would set the stop loss a little bit further below this, like maybe 236 right here. Why? Because right here, 2 places, and even more if you go further back. See, this is the same level right here. Remember, I shared the idea of the ceiling. If you take the staircase and go upstairs, that ceiling becomes a support and it becomes your floor and it supports you. So this was the ceiling. Once the ceiling has been, broken through, look what happened. That same ceiling became the support right here, right here, right here. And again, that level of support is being respected right here. Now, we'll see if it continues like this or not. Now, when would you enter? Now, the way to enter will be is, as soon as this begins to move up, okay, this is where somebody that is doing the stop loss and the profit, what they would do is, they would, let me bring this together. Yeah, they would put a stop loss right here at 236. Okay, they would put a stop loss. And then they would put a target right here, 245 or 246 right there. Okay?
Makes sense.
Now, see, because this support has been respected numerous times. Even further below, you saw that as a resistance. So this would be a place to put your stop loss. And you see the price going up. See that? And what I would do is, so this is a 10-minute candle. I would wait for the next candle. Okay, and this is Tesla, right? Let me find Tesla on the trading view chart, and then we can do the same thing. How do I do that? All right. What is it? TSLA? I think so.
Mm-hmm. Yeah.
My internet is, here we are. Yeah, Tesla, NASDAQ. All right, here we are. Where's Tesla? I think we got it. Should be on the bottom right there. Yep, here's Tesla. I'm sorry, my internet is very slow here. But it's supporting the Zoom fairly well, so
Yeah.
not bad, not bad. Okay, here's Tesla. Oh, here it is. See that chart? So this is a 5-minute chart right here. This is a 5-minute chart, and see what it's look what's happening. Yeah, see it's moving up. Now remember, the 20-period moving average is a resistance, and the 200 is usually a stronger resistance. Okay, so the 200 is a stronger resistance. Now, the best and how much profit would you make if you were to get in at this level when you cross the 200? Let's see. my tool here for price range. Here it is. Yeah. Okay, up to the top level, that would be 2.35. Yeah. 2.3% right there. If you entered here and you got out right there. So if you put a target to sell automatically, that's where you would go. And the stop loss, you could put the stop loss just below here. You could do the 236 or even higher, right? Because the chances of it going down are much less. But the time for entry, you have to kind of guess where, because the 20 is a resistance, but the stronger resistance is often the 200. And so what a lot of people would do, they would wait until the 200 is crossed. Okay?
Wait, hasn't the 200 crossed?
Not yet. The 200 is this black line right here.
Right.
20 is the right here. And so to go up, they would wait until the 200 is
Oh,
crossed.
so the 20 crosses the 200. Okay, got it.
No, but the price crosses the 200. And the 20
Oh.
also will do that too, right? 20 also will cross along with that, the 200.
Okay.
Yeah.
Do you understand that?
Yeah.
Okay.
And also, it's like, when you, it's one more thing that you would need to know is this. Just the 20 crossing the 200 is not sufficient. What you would need is, once it crosses, look at this. Can you see this other example that I'm pointing to? Yeah.
Mhm.
Once it crosses, very often it will go back down and it will test that to see if it has become support. Look at that. It's like, you get on top of a roof that's a little flimsy. You might put your toe down, your foot down softly and press to make sure that this is strong enough. Look at that. It comes down, okay, and then it goes up again. But then it comes down again, it tests it again. Look what happens after that. It just goes straight up because it is confirmed that this is a resistance. Okay, and it's played its game, and then now that resistance is no longer strong enough to hold. Now look at this next 5-minute candle. Look what's happening. Look at that. See that? And we'll see the 20 acting as a resistance right now. But then if the 20 is crossed, then you'll see again the 200 acting as resistance. Yeah. Anyway.
So do you see Tesla as being a good one? Use?
Let me.
I mean, currently.
Let me see if Tesla is on my list. Let me see. Let me just check. I can send you my latest list also. Let me just open this.
Yes, please.
I can send you that list that I'm using for the US stocks. Here it is. Yeah. You can see swing Webull, it says. And and I think there is a place to find the link. Here it is, copy link. And I'll put this link in the chat box. Where is the chat?
Okay. Oh, of Zoom?
Yes. All right, let me see. Here's the chat box. Now I can see it. And here's a link. And that link will open up in in Trading View, and you'll see my entire list. And my list is split into 3. The first one says, let me look at it right now. Yeah, the first one says monthly, weekly, daily on the top. And that list is quite extensive. And then you'll see monthly and weekly only. That's my number 2 list. I usually stick to the ones on the top, but then I would do the second one also. It's monthly and weekly only. But then all the way on the bottom, there's monthly only. Okay, that means only on the monthly chart do I see the 20 above the 200. And the other one, on the monthly and the weekly, I see the 20 above the 200. The ones on the top, which are my best ones, they are monthly, weekly, and the daily. The 20 is above the 200. Okay.
Could you say that one more time, please? We were
okay.
trying to put.
No
We were
problem.
multitasking.
No problem. So
Okay.
on my watch list that I shared with you.
Yeah.
Okay, remember to select stocks for my watch list. What I do is I look for stocks where the 20 is above the 200. First, I check the monthly charts where each candle is 1 month of data. I make sure that the 20 is above the 200. Then I check the weekly, make sure the 20 is above the 200. Then I check the daily to make sure the 20 is above the 200 separately. So that may take me a long time, maybe up to an hour to do that, one by one by one. Okay. Now the benefit is the ones on the top of my list are the best ones. Okay, they're the ones that are trending really good. Now, does that mean those will never dip down very quick, 5%, 10%? No, it doesn't mean that. Sometimes it will, and it has. But those, although it dips down very low, sometimes within 1 or 2 weeks, it comes right back up, or within a month, it comes back up because the trend is so strong. That's why. Yeah. The ones where the
How
trend
much,
is down, yes.
no, when the trend is up,
Yeah, when the trend is up, like on the monthly, that 200 months, that's close to 15 years. So if when you're comparing the 15-year average and it's still moving up, that means that's a pretty good company. They must be doing something good. So it's trending for a long time. That's why. So the ones that are trending for a very long time and a shorter time and more recently, I see those are some of the best. Yeah.
makes sense.
Okay. So the ones
oh,
on the
one
top
last
of the list are the best.
Okay. So as far as your profits go, what's your percentage this year?
My percentage has been, I'm averaging about 3%, 4%, and 5% on a monthly. So from April, once I started doing this plan, from April till now, I've made about 21% total. That's about
So you just add up each month, and that's how you get your whole percentage?
I get the percentage by just calculating how much I made from April till November.
Okay.
Yeah. So I know how
But
much
because you pull out all the time, you add
yes.
each percentage.
But then
You just keep adding.
right, Webull, you can look for the profits that you made and you can set the time. I want it from this month to this month like that. So I checked April to November, the end of November. Okay, I made this much money. All right. Then I take that and I divide that by my total capital and multiply by 100. Then I get the percentage.
So in 7 months.
What's that?
So in 7 months, you made
In
21%.
the last 7 months, I made about 21%. Yeah, a little bit over. Yeah.
And so last year, you made about 30% in 12 months, right?
I don't remember. I forget.
That's what I remember you saying. So you made a higher percentage.
Right.
Wow.
Right. This year I made a high percentage. Yeah, because I'm only taking that 1% and getting out.
Yeah.
Because before I was looking for a bigger percentage, but there was a lot of this up and down, and I ended up waiting longer for that higher percentage. And and I was setting the stop losses too. And so in this swing, I lost money and it just went down also. And this right now, I'm not setting a stop loss, but I'm being very careful about which stocks that I'm trading. And even if there's a stock of a company that I like, I don't trade it unless it is. So the idea with trading for an income is no favorites. We should not have any favorite companies. Only the profit is your favorite. That's it. No favorite as far as the company. But if you are investing for the long term, you're putting something in for the next 10, 20, 30 years, yes, you can have favorites where you're like, okay, this company has done really good for so many years and they continue to do well, that could be a favorite.
So for if you do a stop loss, you will lose because sometimes.
Yes.
And so if we're being diligent and we're paying attention, as we get more comfortable, we don't need to do that stop loss because
That's
We'll
what
get
I'm
lost.
suggesting. Yeah, that's what I'm
Yeah.
suggesting. And for you guys, I would recommend you start with a small amount of money, maybe like, $400, $500, $600 or whatever, small amount of money. And then 2 or 3 months, do this plan, enter with a flat 200, 20s below, the RSI very low, only enter those places. And just keep doing that for 2 or 3 months with a small amount. Don't increase your money, and then just watch how you're doing. And then you begin to increase.
and so
Because-
just have like one stock
stock?
then.
No, I would split it into 3, 2 or 3.
Oh,
Yeah, where
with the
you
lowest amount.
yeah, you may only be buying 1 share or 2 shares,
Okay.
but that's fine. Yeah, it's right now, for the next 3 months, it's not to make a profit. It's just to learn the method and to get some practice,
Yes.
not for profits. Yeah.
Yes. Okay.
Yep. Dan, good to see you as well.
Yeah.
Good to see
When are
you
you
too.
coming back to the US?
We will be coming back this February, but
Ah.
we're going to be on the East Coast this time.
I
Yeah.
see.
Maybe another year
Yeah.
or so, we might come back to the West Coast again. Let's see.
Annie's joining you then?
Yes, she's joining me this February. And
Awesome.
let's see what happens. Yeah, since we both have this responsibility at the seminary, we're kind of, it's difficult for us both to go.
Yeah.
So it's difficult right now. Yeah, and we're going to start this building project pretty soon, so which is going to be quite a challenge for us. So I've never,
Did you get,
did I get?
have they been, go ahead.
No, I've never done this kind of, this amount yet. It's going to cost approximately about $500,000 US. And so I've never done something of that size yet, but we'll see. We'll see.
Sounds
God will
exciting.
provide. Yep.
Yeah.
These
I was
buildings
wondering,
are very old.
oh,
Yeah.
so you need the upgrade.
Yeah, very old. They're
Yeah.
falling apart.
Oh. Okay, well,
Yep.
it's good to know how to pray.
All right. Bless you guys.
Yeah, I
And-
wanted to ask you also,
Yes.
I forgot.
No problem.
Okay.
Leave a message on the WhatsApp or on Signal. Yep.
That's good. Thank you so
All
much
right.
for your
Bless
time.
you guys. Have a great day.
You
Bye
too.
now.
You too.
Bye. Keep in touch.
Okay.